Welcome to the closing beat, everybody. Happy Monday to you. How you doing out there? Everybody's good. Welcome. Thanks for watching here. We are financial advisors at Jazz Wealth. While other advisors are playing checkers, we're playing chess here. And one of the ways we do that is we only grow if your investments that we manage here for you grow. So it puts us in sort of the best interests of each other there, right? We want to see you do well because it means we do well. We're not ashamed of that. And well, we have, we have a Guess the Dow winner?
Absolutely do.
Do we do? We got a Guess the Dow winner. Let's go on over here and see. Ooh, fancy.
Yeah.
Come on now.
That's your guy.
Really? I didn't even know. I didn't. Congratulations, Bruce, man. He won the game.
Bruce, one of our most loyal followers and a client of ours. Congratulations to him on winning Guess the Dow. He's going to take the $100 credit because he watches the show.
He knows. Nah, yeah, he knows.
He knows.
Oh, man. Well, if you want to play, jazzwealth.com/guess the Dow. You're welcome to play. And congratulations, Bruce, for winning there. Thank you for all the support. It is also now, well, it's a new quarter, a new month, a new week, a new day, right? All that stuff lining up at the same time here. Let's just put all that. Let's just put all this behind us here. You know what I mean? We live, forgive and forget, or whatever they say there. Trouble, we still see rallies getting sold off. I'm going to try something. I had not planned on doing this. Let's see if I can do this on the fly. Check this out. So we're going to go to time frame, but I want to go back. Let's just do 30 days. But I want to see like the intraday performance there. And will I be able to zoom out? There you go. So if we look through rallies getting sold, you can see it, right? Minute by minute. This is a 5-minute chart. We're just looking back. Every time we try to rally, we're getting sold off. See that downtrend there? So technical traders see that, and they're like, uh-oh, if we go a little bit further, we're going to meet more resistance there in terms of people that like to follow the technical stuff. We had futures open up higher, right? The government shutdown thing. Oh, it's not going to be a big deal. It will be, just exactly like I said, by the way. They're going to kick the can down the road, give themselves more time, and then we'll talk about the shutdown around like Thanksgiving or so, somewhere in there, just before that. And so for that reason, we see futures up, and then they sell off. We opened lower today, little minor rally that got sold off, and all throughout the day really struggled to get anything going there. Now, manufacturing numbers that came out today were better than expected. Construction spending numbers basically as expected. That's not good. I mean, it's good for the economy. We're all excited, but it's not good because then the potential of more rate hikes kicks in, and that's the conversation you probably see on TV. I didn't get to watch today, but that's probably what you see. Because people are saying, well, if the economy is that good, that means it's going to be tough to get inflation lower, which means the Fed has to raise rates again and maybe again and again, and we'll see what happens from there. So nonetheless, you got a market that's kind of stuck. It's a little bit of a tough spot. You won't notice this in the NASDAQ. And I'll show you in a second why. NASDAQ was down 5.8% in September. That brings the Q3 loss to 4.1%. We're in this 60-day sort of trend lower kind of a thing going on. I just showed you the intraday there. Worst month in almost a year, actually. You got to go back to December to find a worse month than what we just had in September. We'll come back to that in a second. The S&P not really able to get anything going, down 4.9% in the month, 3.6% over the quarter, so losses quarter over quarter. 4 weeks in a row. If you look at it there, it's 4 weeks in a row that we've had losses. That hasn't happened this year. We actually haven't had 4 straight weeks in a row of losses. And what a coincidence that it happens right in the August-September time period where everything we've been talking about shows that. Here's the interesting thing. Look who did all the heavy lifting today. This is just a heat map. You can go online and find these heat maps, right? I said, well, let's just go look at a heat map. Well, my God, look who was trying to help the market today. It's the big names. The bigger the square, the more say they have in the market, the more impact or weight they have on the market performance. And wouldn't you know it, it's your big guys in there. You got Tesla, Amazon, Alphabet, Microsoft, Apple, and NVIDIA. These guys over here, Doesn't matter really what they do. See all these little guys that Chipotle could have a good day. It's not moving the market, but this can. What would have happened if these guys pulled back off of their highs? Man, the whole market would have just come down, right? Because look, everything else is weak. So the stock market is telling you we're not strong. As a family, we're not strong. We have a few names that are really strong. I actually shared that in our notes from Jazz this weekend. I'll share it with you since I mentioned it. Let's go here. Look at this. Year-to-date change by company size or by market cap, right? So if you want to say it that way. Who has all the gains? It's these guys, the biggest of the biggest companies. You look across the board, the smaller you are, we kind of got a little trend line there. The smaller you are, the lower your returns. If you're negative for the year, the smaller you are, the worse your losses are. And then the bigger you are, not so bad, right? So you put all that together, you go, oh, the market, it's just those guys, right? So if these guys stop playing and they don't want to go up anymore, whole market comes down, right? So you could be optimistic, I guess, and you could say, well, if these guys keep bouncing, which they're mostly all oversold, they're due to bounce. If they keep bouncing, this can stay weak. All utilities down here, every single stock in that sector lower today. Oh, that's fine. You could stay lower. It doesn't matter. We'd like to see energy pull back. That'd be good for the stock market. Okay, cool. So if all that continues to happen, we could still have a market rally without almost all of this, right? Isn't that kind of upsetting? Now, we get to the fun part historically. You ever see like the stat, sell in May and go away? I showed you that September is historically the weakest month of the year. All that played out. That's all fine, right? Now what do we look at? End of year, Santa Claus rally? Is that where we're supposed to focus? Okay, sure, you're going to see that. So the basic discussion from financial people that sort of kind of pay attention is that. My job is to try to impress you so that you go to Jazz Wealth, you schedule a call, maybe you work with us, right? That's why I'm here. This is obvious, right? So what I wanted to do was do something in addition to that. Well, okay, you can go find all that elsewhere. What can I share with you that's something different? Well, we can look at the range of each month. So we could say, even though October tends to be a good month, November and December, what sort of pain do we potentially have to suffer through? The backs and the forths, the volatility. What do we have to suffer through in order to get that good gain? Well, we would look at the high and the low for the month. Then we would do that for each and every single year and see about what the average is. That's a long way of saying, guess what? October, though it's known for being historically it's a positive month, right? 60% of the time over the last 100 years, we have a range of 7.1%, and that's higher. See, that bar is higher than all the other ones, right? So we could tell. That means that October is going to make you earn it. Okay, so think about that. We know lots of things are oversold, looking for a bounce. Okay, it's fine. Maybe we get it, but it's not likely to just be a big stretched rally all the way up. It's going to make you earn it. In other words, the distance between highs and lows averages about 7.1%, ultimately and on average finishing a little bit higher. We can't say that, right? So you look through the summer, we can't say that for this time period. It's known for being quieter, slower, less interesting. We just did that. We went through the summer. It was quiet. It was slow, less interesting. Christmas time, okay? We got that basically the last 2 weeks of the year where nobody's really trying, you know what I mean? With family and stuff, right? So that's known for being quiet. So even though the gains are positive the majority of the time, you're not going to see a lot of pain in order to generate that return. So putting those things together, would you rather have a lot of pain, potentially, in order for a small but highly probable gain, or would you rather have less pain, less back and forth, in exchange for a little bit higher of a return? So that's why we get into the end of, as we get into the end of the year, people go, okay, these are easy gains. Historically, they're easy gains, right? It's quieter, it's slower. That's what we want. We want like the most boring market ever if we could. Just slowly go on up. Occasionally there's some bad news. Okay, we go back up again. That's the difference of what you're going to see going into the rest of the year. So if October is wild but ultimately positive, you know now that's normal. It's okay, right? No worries there, right? So we're not going to be shocked when we see that. Also, fun fact, I just thought of this. October holds the record for the most amount of times stopping a pullback. I didn't prepare anything, so I hope I said that right. So we have a pullback, right? At some point in some month, it will end. October has the greatest number of times where a pullback ended in that month than any other month. In fact, March is a distant second. So wherever March is on here, here's March. There's actually the end of a pullback in March. So it's a great example to share with you. So March is only the second best month for stopping a pullback and leading into a rally. Wouldn't you know it? We're in October. And what did we talk about last week? We're going to be in October. We have the seasonal support, the seasonal tailwinds helping us out. But we also have a lot of stocks oversold, and now today a little bit more oversold, due for a bounce. If they just help a little bit, what does that do? That puts all those stats back into play there, so something to keep an eye on. And I rambled a little bit. I'll stop. Let's go on to something else. Let's do the Dow. Down 3.5% for the month, down 2.6% for the third quarter. Lost 1.3% of that just in the last week. So it gives you an idea where the majority of the moves come from. Elsewhere, Bitcoin got some attention today. Big pop out of that one. I don't usually follow that too much. I did follow bonds today. Oh, just when you think that's a bottom, and I'll admit it, I said it. And when you see that right there, that looks like people trying to guess the bottom. Unfortunately, for the moment, they were just ever so slightly wrong. Still very much oversold, and these rates are on a one-way track at this point. That's a new high. Once again, a new high in the 10-year, and soon to be mortgage rates as well. So that, what else? Do I have anything else before I move on? Oil pulled back. That's good. People are looking for that pullback in oil. Lots of oil names pulled back today. The Russell 2000 giving up. That's the weakest of the group, by the way. That's the biggest pullback. It's, you know, the most discounted index at the moment. So if you like that sort of thing, that's where you're looking. Last week, I didn't get to cover it there. Inflation numbers, a little downtick in those numbers that came out on Friday, right? The PCE numbers there. That would normally be good news, but, right? So we got to look at that. Remember, the impact of rising rates is slow. This is why, like, we're all like, recession. Oh, man, there's going to be a recession. Why doesn't it just happen then? You know, it's because these numbers are slow. They're backward looking. It takes time. If you think about it, costs slowly eat into our spending. You are just now starting to go, oh, I do this one thing once a year, and now it costs that much? Ugh. I went and revisited my childhood neighborhood, and oh, the houses are this much? Oh my gosh. I went back to a family store when I was on vacation, and oh my God, you guys charge this much now? Oh, I guess, you know, you have to. That takes time to eat into it for us to make different decisions financially there. The higher rates for mortgages. That takes time. Most of us are sitting here. We bought our house. We're sitting and living it, right? We're done. We've got the low interest rate. The transition will take time for us to admit it and go buy another house and pay the higher mortgage rate and all that stuff. So that takes time to eat in there. Stocks also take time. The cost to borrow. Think about it. The companies that are out there, a lot of the companies that are out there, use debt. But they're not using debt right this moment, right? So they're not making decisions right now to raise more money. And so it takes time for, oh, hey, we need to take on more debt. We're going to pay some of this off, take on some more debt to continue our operations, right? That takes time. That cost to borrow takes time to eat into the market. We can track it, right? We can actually look at that. So here we go. Here is the smoothed out line, so it doesn't look messy for you here, of borrowing costs. In other words, what is the total cost, the interest basically, to borrow relative to the amount of debt that companies have? And then let's just apply that to the whole S&P. Let's not pick favorites. Let's do a whole index here. So if we plot this over time, we can see, oh, cost to borrow is going up. In fact, it's almost as high as it was back just before the financial crisis there. So that takes time as well. As the quarters tick on, and in this case, we're using each quarter as a plot, right? So as that ticks on, the cost to borrow is what? Next quarter, it's going to be a little bit higher. We can see that right now. There's no major change in bonds or interest rates right now. Cost to borrow next quarter is going to be a little bit more, right? The Fed says, well, maybe we'll cut rates in, you know, somewhere in 2024, the summer, late summer. How about that? And they're thinking about that. That means those quarters that pass, the cost to borrow is going to be higher. That impacts stocks' earnings. It impacts their decisions and their growth projections and what they'll do. So that takes time as well. So when you look at all that stuff, it's just a long way of saying that's why there's no like immediate recession. I got that question, and I'm like, if we all knew there was going to be a recession, why don't we just get it over with? It's because it takes time, right, for all that to bleed into what we're doing. All right, a little bit of a side lesson there. Let's move on. Okay, stocks in the news. Not a whole lot today. Lockheed Martin, normally something like this wouldn't be interesting. You wouldn't look at it. They got a $2 billion Navy contract for the F-35 and some kind of missile. I was going to look it up. It's called the Trident missile or something. I just thought it was cool. I was going to look it up. I didn't get a chance to do it. Norfolk Southern, they had some outages. You know how airlines, they'll be like, oh no, our systems are down and flights are getting canceled and stuff. Same thing, just apply it to a railroad company. So not as many people, but a lot of stuff moving around, right? They said, we had a little bit of an outage there. Took us down for a few hours. I believe they're still down. I did not see the thing. Maybe they might be back up by now, but that is in the news there. Barron's was really all over Occidental Petroleum this weekend here, saying as oil pulls back, Occidental Petroleum stands to benefit the most based on their position. I did not get to read all of it. I started reading it and I got distracted. I can't. Well, bouncing around, doing all this stuff. Rivian, here is the difference. This is a big difference here. Rivian, the car deliveries for the EVs came out today, or over the weekend, I think. They delivered more cars than expected. Oh my gosh, they're going to compete with Tesla. Okay, Tesla's like, we delivered more cars than expected there. Huge difference between the two. So Rivian, as they make more cars, their cost is going up. Imagine if Walmart, as they sold more stuff, they made less money. Like their costs went up to sell more stuff. Well, that doesn't work. What business model is that? They have a negative $200% profit margin. So you invest $1 and you just like negative 200% back. Is that good? Is that something that excites you, right? And just to compare it, right? So Tesla, they have a 13% profit margin. Okay, is that good? Doesn't sound like it's very good. Well, let's compare it. Let's look at Ford. Ford has a 2% profit margin because they're transitioning to the EVs right now. So their costs are going up, but hopefully they'll figure it out. So negative 200% profit margin. Let's pretend. I no longer want you to allow us to work with you here at Jazz Wealth. Let's pretend I am selling shares of the company and you can buy into it, right? You could be part owner. Let's pretend this is not real. And you go, well, I'm going to need to see if you make some money, Dustin. I hope you're making money, right? Let's go see. And I say, well, actually, it's funny. As we grow, we're losing more, right? And so, yeah, I want you to invest in me, but we don't make any money. And in fact, we lose 200% more than what we bring in. So in other words, we don't have earnings. We have sales. And unfortunately, the cost of those sales, it's about negative 200%. Are you going to buy that? Come on. You know what I mean? You might even not like Ford. You got to believe in the future there, but you might look at Ford and say, it's a 2% profit margin. Can I invest in a restaurant and do better than that and basically have the same economic risk? I don't know. So something to think about there. That's all I have. A little bit of a rant today. I'm sorry. Cal-Maine reports tomorrow, and McCormick was the other one. Were they going to report? They do report tomorrow. Very oversold stock. Other than that, we've got some investor days coming out for a handful of different stocks. We've got the vehicle sales numbers coming out tomorrow. Hopefully interest rates stop rising. But yeah, that's what we have to deal with right now. So just dealing with it. I'll take your questions if you have any questions, and then we'll get on our way there. Yeah, 5 to 7 stocks holding the market together. It looks like the market's stabilizing. Isn't that fun? Right? I spent some time on that in our notes from Jazz. If you're a client, you can actually go. I started very simple with how things are breaking down. I went all the way into the geeky stuff. So if you want to see like the actual change, the actual contribution, and I did the top 10 stocks instead of the top 7 to just show the difference. You know, if you took the top 10 stocks out of the S&P 500 and said, you know what, aside from the classes of shares, we're going to call it the S&P 490. There's 490 stocks. Okay, let's take their performance and take out those other stocks. How would that have done relative to what is actually happening? If you took out the top 10 stocks, the S&P at this moment, at this moment, would be up just about 1.7%. That's what we'd be looking at. A market that's up all year. That's what we got, 1.7%. So I broke it down and went into some more details there to kind of help visualize that there. S&P sold SPY at 444, but sitting on cash and selling puts. Knows what he wants. You paid $29 for an old-fashioned in Miami the other night. Lenrock That might be about right. It's 15 at the Clearwater office, and it's 19 at the Tampa office.
Oh.
I only know that because the other day I went with Haley, and she's like, I got this. I got my advisor thing. I'm going to buy your drinks. You know what I mean? She was excited. And I was like, great, I'll have an old fashioned. And it was a Buffalo Trace old fashioned. And then at some point, I will have another one. And she looked at the bill and she's like, and I got a tip. I'm like, yeah, they're very nice. You have to tip. So 29 in Miami, that might be right, you know?
That's too much. That's too much.
What's your favorite spirits drink?
I'm a simpleton.
Simple guy?
Just give me a beer.
Just okay. Cody with the beer.
I'm not fancy.
All right. What's that run these days?
$4, $5, unless you're at like a Bucks game. But for the most part, it's
$4 or $5.
Yeah.
Okay. All right. Well, there you go. Brandy old fatty. Oh man. Why did bond funds go down so much today? I wonder why. Why did bond funds go down today? I'll tell you why. It's your bonds, right? The very assets that they hold inside of those funds, right there. There's the price of your 30-year today. Here's the price of your 10-year. Big move to the downside, right? Looking at entering AMD. He says, all right, I see what's going on here. You get a nice little pullback. All I can really say is that one has pulled back the least of all of them at the moment. I can't actually say buy it, sell it, or whatever. We get in trouble for things like that. But if you're looking for relative strength, then that one is the top of the list. That's just a simple scan, to figure that out. You got a SoFi dip. Oh, that's right. Yeah, I forgot about you, SoFi over there. So you were looking for that to dip. Okay, yeah, it did come on down to 750. You're looking to add more 776. So now what do you have? Look, you had that, I think in here somewhere you were saying, I hope it falls. You got down to 750. That's perfect, right? Here's your bounce. If you missed it, no big deal. Now you look for that next little pullback. Is that going to be the next little pullback that gives you the higher low? And maybe that's attractive to you, We're voting turnaround Tuesday for you. We'll see. We'll see. Ed or guy, you looking for a bottom on Target? There's a couple of them. I sure would like to see a bottom on a couple stocks. Target, still nothing there. Yeah. Don't guess. There's no need to guess on the bottom. Like there are times in the market where you go, this is a no-brainer. I'm going to guess that this is the bottom. This is not that time. Think of where the market's at. It's being held up by just the tiniest little strings, those 7 stocks. And if any of those little strings start to pop, we already have weakness everywhere else. So this is a great example of that. There's just not the time you want to be assuming you found the bottom. I wouldn't, personally. On this end-of-day rally in the Russell 2000, the Dow negative for the year is getting ready for a bounce. There's so many names. You could use the Dow. Look at the Dow and you look at the names that are lower priced that have less impact on the Dow. They're oversold, right? In the S&P, there's so many oversold stocks right now. They can do it, but they've chosen not to do it today. Yeah. Utilities, roughest day, right? They had the roughest day all around there. It's all, you look at the rates, right? You can see, obviously, people, they go, well, if we're going to be what they're quoting in TV, higher for longer, you see how they say that on TV, then, well, that's not going to help, right? Utilities, 92% of all their operational costs come from debt, right? Now, the good news is technical traders like this sort of thing. I'm not saying this is a buy. I'm just saying if you were taught the most basic technical analysis, go out there and get them, bud. You're going to be a great trader, kind of a class, the people that sell the classes. What are they going to tell you? Look for multiple days down that creates extension. And the clue to maybe hitting that bottom, the end of the selling, is if the last day is the widest day, and in the background, that's where I have it, the volume is above average. That's the thought. There you go. I saved you $3,000 right there. That's one of the lessons they'll teach you. And so what do we have today? Multiple days down, clearly oversold, very extended technically. And biggest day is today with the most amount of volume. The thought there, when people sell that stuff, the thought there is that it's washed out. The people that were on the fence about selling, everybody made their decision, just go ahead and give it up. And so the thought is that there's now got to be less sellers than buyers. I don't know what the stats are on that, but there you go, right? Give you a little insight. I heard that Fiat has sold fewer new cars I was thinking about doing that the other day. I'll come back and do that where we went through, because auto sales numbers will finally all come out. Everybody will be put out there, and we'll rank everybody by size, like how many cars they sold and stuff, just to see if there was in fact a downturn. Modelo, the #1 selling beer. Is Modelo's American beer?
It's not, but it's it's the most popular. So
Oh, because of the thing with the
because of the thing, yeah.
but the other guys, yeah, that did happen. Yeah, well, yeah, these things, one day I'm gonna say something. Everybody's gonna be like, "Oh, that's too much," bud. No, I mean, just it's a part of it. Like everybody's gonna do it. It started with Sandra Bullock. No, what's her name? The cook lady. It was really funny.
Oh, yeah.
It started with her, right? She was the first.
Yeah.
Everybody has to have their time. Kevin, he's going to say something one day. We're all going to go, whoa.
Oh.
Yeah,
You won't say it into a mic live on YouTube.
No, that's the problem with me. It's going to be right here, and then what are you going to do? Modelo. Oh, man. How would you evaluate a company to buy for specific sector, production, or manufacturing, such as lithium production, for example? Got that question a lot. You can either go one by one, and if you're really into it, have at it. There's no shortage of research out there. Or number two, maybe you go the ETF route. They're getting more popular, and by popular I mean more assets are going into them. So depends on how much time you want to spend in it, doing the research. Some people are really into it, and some are not. News analyst saying oil's headed for 150. I don't know what his timeline was on that, but I definitely you could go with 100. I think that's the easy one to say there, based on everything that is happening currently. You have to have demand just fall off a rock at this point, or a cliff, right? So I don't know about 150 at this point, but 100 is an easy target. Is there a North Face commercial? We don't really get many of those commercials down here in Florida. No, North Face advertising down here might be a waste of their money, so I'm going to say I didn't see that. Did Martha Stewart say something?
No, it was Paula Deen.
Paula Deen, that's what it was. Who did I say? Sandra Bullock? No, Paula Deen.
Yeah.
That's it. That's the one. They're night and day different people, but obviously, maybe Sandra Bullock said something too. If not, it's a matter of time, just a matter. So forgive me ahead of time, Got right in front of it. That's it. Okay, I'm going to wrap it up there before that does happen today. So let's do that. I hope you learned something today. Our goal here is to be teaching. By teaching, you ask questions. So if I can teach, I just teach clients all the time, just constantly throwing stuff out there. I know it seems like a lot, but I'm here. So I'm not out there doing something else. So hopefully you learned something. If you're not a client and you're watching and this sort of inspires you to do more research. Otherwise, I thank you for watching, and we'll try again tomorrow. It's what we can do. See you.